All right. So I am live. So I'm live on Instagram as well. So, you know, I don't know how this worked last time. Hopefully it worked well. Good evening, good evening, good evening. Welcome, welcome, welcome. This is Carmen, Boss Lady Bernard, and it's Wednesday, and Wednesdays I'm live. It's 2024, and I want to make sure that I do go live every Wednesday um, as much as it is possible. So today I want to talk to you. It's the beginning of the year, and I want to talk to you about that big L word, love. Well, it's actually synonymous with love. It's life insurance. Life insurance. So I want to talk to you tonight about life insurance. If you are here, say hi, put a chat, put something in the chat to say that you're here, you stop by. If you are not, if you're listening on the replay, type hashtag replay. Now, we don't like to talk about life insurance, but life insurance is what I do. It's one of the major things that I do, and I'm super passionate about doing it. By the way, y'all, if you don't know, I'm in Atlanta, Georgia. We're currently under somewhat of a freeze. We're not accustomed to these kind of cold weathers. So we're asking the people up north to come, in the Midwest and wherever else, to come and get y'all weather, because it's over here stuck and we need you to come pick it up and take it with you. All right. As we are not doing this teens in the degrees, right? That's why I left New York. That's why I left New Jersey, so that I wouldn't have to deal with this. But apparently, we have to from time to time. All right. So I'm going to tell you a little bit about me, right? When you guys know I'm a retired teacher, so once a teacher, always a teacher. Um, and I fell into um, life insurance uh, sort of by accident. I should say the being able to help people with life insurance by accident, because I've worked in insurance corporate America for years, but just not on this side. All right. And this side actually is great, because this is where you really get to help people. And that's what I want to do tonight. I want to be able to help some people, even though this is something that we don't like to talk about. All right. But every single day that I wake up, there's not one day that I wake up that I am not reading or hearing about someone that I know. And these people are young people that passed away tragically. Some kind of ailment took their life, or just by accident. I have lost this year, not this year, 2020, 2023 only, many of the students that I taught I've lost, and they have died. They have left children behind. But when I got into life insurance, that's the main reason that I got into it, right? Was trying to make sure that, you know, people um, understood how important it was to leave their children a legacy, leave their children with dignity, leave their children if they have to leave, right? But then once I got in, I realized we're not just talking about death. We are not talking about if you die. We're also talking about if you live. We're talking about this is something that you should have regardless. Even if you had the secret to keeping you alive forever, you should have this, right? So I thought at the beginning of the year, this is a good time for us to just go back and talk a little bit about life insurance, the different types, which one is better for you, what's the pros and cons, evaluate your situation, and know where you need to go, what path you need to take, right? So, and I've done this particular topic before. I just want to bring it back because sometimes we have to go back to the basics. And so that's the reason I'm bringing back. And anything that I bring to you are facts, nothing but the facts, just facts. Big facts. All right. So let's start out with the types of life insurance. You probably have heard of term life insurance. Okay. It's very straightforward. It's affordable, right? It's typically it's for a number of years. So think about, it's giving you coverage for a number of years. And should something happen to you during those years, you will be covered, you will be protected, and your family will be taken care of. So think about it. It works just like your auto insurance. Most of the times our auto insurance is for a year, a term of a year. Every year it gets renewed, which means the price will go up. Or in auto insurance, maybe it won't. Now, recently, it's been going up, skyrocketing. I have had to change mine because I realized that I needed to shop around. Right? We need to review sometimes, and we need to shop around. So I've had to change it. But that's how term life works. It's for a specific term. Sometimes you'll hear people say it's where you are renting the coverage, meaning you don't own it. It doesn't appreciate in value. Hi, there, my granddaughter is looking at me. Hey, Churns. It doesn't appreciate in value. It doesn't, but it's there for you. It's basic. It covers you, right? It's typically very, very affordable, especially when you are young, especially when you have children, a family that depend on you. Term life insurance is a great option, or a part that should be a part of your portfolio, because it allows you to have a big coverage, a lot of coverage for very little money. So term life is the way is one of the best options, especially when you have a big family, and especially when you have when you have a big family, and especially when you are young and healthy, and you want to make sure that you get the maximum amount for your dollars, right? Term life insurance, right? While I'm on term life insurance, let me talk about it a little bit. Term life insurance, you don't own it, right? So that's why they say you're renting the coverage, kind of, right? And once the term is over, it's gone. But that's the same way your job insurance work. Your work insurance is kind of like term life insurance. It's only for the term that you are there with them. Now, there are some employers that allow you to take the insurance with you, but when you take the insurance with you, you do not get the benefit of the group rates that you were getting at work, you know. So for example, I think it was last year or the year before, we were talking, a colleague and I were talking with one of our clients who wanted to make sure that her child was taken care of, right? She actually wanted to make sure that he would have $1 million in his life insurance that he would have access to by the time he was age 25. So, you know, she was going to fund it with some big money. However, once we assessed our situation, we recommended that she also get some life insurance on herself. And she didn't want to do that. She said, look, I have some term life at my job. That's enough for me. I just want to make sure that my child is going to be covered. Well, it's not been, it's a year or a year and a half later, and that young lady passed away. And she was a young lady because she was way younger than me, right? And some of you may say that I'm old, and that's okay, because old is the goal, right? But she was younger than me, right? And she passed away. And now we have things to worry about, like what's going to happen to that 4-year-old? He's probably like 6 now, 5 or 6. What's going to happen to him? right? Because now she's not there to fund that policy anymore. And that policy was on him. So he is still there. So that policy is not going to pay anything, right? So it's absolutely important to look at everything, right? If I know for a fact she did not have $1 million policy with her job, she would have been lucky if she had $100,000 with her job. As most times, that there's a limit to how much that you can get with your job, right? But anyway, that's term life insurance. And term life insurance is one of the things that we believe should be a part of your portfolio. And just because you've picked up some term life insurance does not mean that you're not supposed to look at the other types of insurance and that you're fully protected and fully covered. Because there's some term life insurance typically is cut and dry to the bone, right? You get to use it, or your family gets to use it if you die. But what we have newer products now, including term, that allows you to use it while you're still alive in the event of chronic illness, in the event of critical illness, in the event of terminal illness. You can use that money while you are alive. You can continue to pay bills. You can continue to take care of your children so that you can focus on trying to get well, right? So what do you have right now? It's a good idea to evaluate what you have and see what type of insurance do you have. Do you have the type of life insurance that you have to die in order to be able to use, right? Should you look at replacing what you have with something better? Okay. And if you are not in a better position when someone is talking to you about it, run. They're not doing any good for you. We have to make sure that if we move you, what we are doing is something better for you. All right. Okay. So, term life, that was one of the types of insurance that I wanted to touch on. Okay. Now, the next type of insurance I'm going to talk about is whole life insurance. All right. Whole life insurance. Now, with whole life insurance, it in the name it says it lasts for your entire life, right? The life insurance is for your entire life, whole life insurance. But the biggest thing I want you to understand is that there are several different types of whole life insurance. That's why I don't ever want you to walk away utter the word, "Oh, I have insurance," and that's it. Always see what else is there, and is it a good fit for you? Look and see, review what you have. I do free reviews with people. I have spoken to many people and did not make any changes because what they had was right for them, right? But how would you know if you're not sitting down with a professional to help make sure that what you have is right for you? So whole life coverage is lifelong coverage, typically builds cash value over time, right? The con for whole life insurance is that they're higher premiums when it's compared to term life. But like I said, there are different types of whole life insurance, right? For example, let's go right here. There's an insurance, you might have heard someone say final expense, right? Final expense insurance is designed to cover funeral expenses and debts, anything that has to do with your final disposal of you, your bills and your debt, your funeral expenses and things like that, right? With final expense, it typically will cost, depending on your age, and most of the times final expense starts from about 45 years old and up. I think there are a few companies that do offer final expense to younger people. But the benefit of final expense is that you're able to get lower coverage amounts. So we're not talking anything in the hundreds of thousands of dollars. So it's not going to take care of your children if you have younger children. So that's not typically a best option, because you're talking about 30, 40, $50,000 max when we're talking about final expense. I think maybe here and there you might find one that you can get $100,000, right? So, but the premiums, like I said, for final expense, the premiums may be a little bit higher. The coverage amount is a little bit lower, and it's only to take care of certain things. Now, as I said, if you have a final expense policy, and that's why I don't want you to ever walk away saying, oh, I have insurance already. What do you have? Is it adequate enough? Do you now have children? And if you have children with a $30,000 life insurance policy, how is that going to do? What is that going to do for them? It's not going to do anything to help take care of them. If that's what you wanted, if those were your dreams, that's what you want. You want to make sure that in life, while you're here, you want to make sure that they are being taken care of. Well, also, are they being taken care of in when you're not here? Right? I started when I said we're going to talk about the L word, and that's what it's about. We love our children. We want to make sure that our children are taken care of, even if we weren't here. But a final expense policy is not going to do that. Now, if that is the only thing that you can do, that's the only thing that you have that you can do, the only thing you qualify for, or whatever it is, then yes, because it's better than having your family to have to do a GoFundMe or something like that in order to take care of your final expenses, right? But final expense is a whole life policy, but it's not the same. It's not the same as a high cash value whole life policy that you would use to park your money or to grow your money, and then to also be able to use it at the same time. We're talking about totally different tools for totally different things, right? But a final expense policy is a whole life policy, right? And while I'm on final expense policies, typically you can get them a lot of times without any kind of medical exams and things like that, because it's not a lot of money. It's not. So, $30, $40, $50,000, $20,000. Some final expense policies you can get as low as $5,000 and $10,000, depending on the state. Sometimes maybe even $2,000. And when I was looking at the television the other day, and one of the policies came over, and they always talking about units, how many units you can get, right? And the unit of coverage, it could be $500 in increments of $500 or in increments of $1,000. That's what they talk about when they're talking about $9.95, right? And typically that is for the third type I'm going to talk to you about, which is guaranteed issue life insurance. Now, guaranteed issue life insurance, again, is typically not a lot of money, not a lot of coverage, ranging from $5, $10, sometimes even $2,000 all the way to about $30,000, right? And guaranteed, or $25,000. And guaranteed issue life insurance typically goes, many insurance companies cover you from about 50 and up. There are a few that do younger people, but the insurance is a lot more expensive. So even if they broke it down and told you $9.95 per month, or less than 35 cents a day, but 35 cents a day for how much coverage? Is it 35 cents a day for $500 worth of coverage? Is it 35 cents a day for $1,000 worth of coverage? What is it for, right? So if it was 35 cents a day for $500 worth of coverage, $500 is not going to do anything. You're going to need several multiples of 500, which means you're going to need several multiples of that 35 cents a day in order to make that work for you. All right. So that is final expense. And final expense is typically guaranteed. Sorry, guaranteed issue, just like final expense. It's no medical exam. It's guaranteed acceptance. So it doesn't matter what you have, they will accept you. But you got to understand that it's limited coverage. Typically, they in the first 2 years or 3 years, they do not pay any of they will refund you your premiums, and sometimes with a certain amount of interest. But you will not be getting, if you had a $10,000 policy and you passed away in those first 2 years, is limited coverage. In those first 2 or 3 years, they will just return the amount of premiums. But it's good because some people may be suffering from, kidney disease or AIDS or whatever it is that you're suffering from, and you cannot get any other insurance, and you want to make sure that your final expenses are taken care of. You do not leave a burden to your family. So you would definitely benefit from final expense. And that was typically what I was looking at when I got in, because so many people were passing away without leaving, having anything to help the family, and then the family having to turn around and do GoFundMe's. And by the way, did you guys know that I think it's less than 40% of GoFundMe's for medical or funerals are ever completed? And people sometimes are just asking for a couple of $1,000s, but still does not work, right? Then there is still under the whole life insurance, we talk about cash value life insurance, which allows us to be able to park our money in our insurance policies. Now, why is this important, right? Let's say you had a big fancy Lamborghini, whatever it is. Would you just leave it out in the street? Right? If you lived wherever you live, you probably wouldn't want to park it in the street. You probably want to put it in a garage. You probably want to cover it. You want to do all these things to be able to protect it. And that's what we're talking about, is being able to protect your money. Where can you park your money, right? Where can you park your money to make sure that it is protected? It's not going to be subject to loss, right? And not only that, but you're able to then use it for something else. So when you have let's say you had a large sum of money, or let's say it was $10,000. Let's say you had $10,000 sitting in your bank, right? That money is most likely being eaten away because you're not getting any sort of interest on it. And even if you are, very little, but even if you are, it's not enough to keep up with inflation. So you want to put your money somewhere where it's going to be protected from those thieves, those things, those thieves, like things like inflation, right? Because now your $10,000 next year can only, will not be able to buy $10,000 worth of something of value, right? It's probably now 9,500, right? In 3 years, it's probably now 9,000 or whatever, based on the rate of inflation. So you're losing money that way. But here, how about if you can put your money somewhere, it's going to gain interest, and you can still take the money out and use it for something else without losing the ability to gain interest, and not just interest, but to gain compound interest, right? So it's absolutely important for now you're able to use your money while it grows, right? If you had your money in the bank, you couldn't go say, hey, I'm going to take my money out. I'm going to take some of this money out of the bank, but I still want you to give me the little itty bit of interest that you're giving me. No, you're not. That's not going to happen. In addition to whatever little bit of interest that you are getting, you are also going to be paying taxes on that, because a 1099 is issued every year, right? So it's taxable. So not only is putting your money here, while it's being protected, while it's growing, it's also not taxable, and you can use that money to do something else. Where if you have needed to invest in some real estate or to start a business, you can take that money out, use it for whatever it is that you want to use it for. And then once that gave you a return, you can now put it back, and your money would have been even more than when you moved it because it kept growing, right? And those are some strategic ways for you to grow your money, protect your money, and use your money all at the same time, right? And that's another type of whole life insurance. But of course, it's whole life. It builds cash value over time. You're able to use it. You're able to use it, and not every company allows you to do that. Many of them, you cannot touch that money for a year, right? You want to talk to me about where can you move your money, put it in, and use it right away, and have it still gain interest while you're using it for something else, right? In as little as 10 to 30 days. All right. And then there's some additional types of insurance like universal life insurance. With universal life insurance or index universal life insurance, there's universal, then there's something called index universal. When you hear index universal is basically following the stock market. So when the money in the market goes up, your money goes up. When it goes down, you do not lose a penny. But your actual money is not invested in the market, so you don't get as much as what the market returns, but you are guaranteed to not lose any money, right? And so with your index universal life insurance, and the universal life one, it works where it is just a declared rate by the insurance company, right, of how much they will give. But the good part about universal life insurance is that they're flexible premiums, right? Flexible premiums, flexible death benefits. You can decide how you're going to fund it. You can decide that I need to lower it for a couple of months and then I'll bring it back up. Whereas with typical whole life insurance, you're not able to do that, right? And there's also what is called variable life insurance. I don't do that, but that's where your money is actually invested in the market. So there's pros and cons, there's market risk, there's all sorts of other complexities, potential for increased premiums because your nest egg is going down. And that is not going to happen with your index universal life as long as you're continuing to fund it properly, right? And the key to that is having someone to be able to structure that policy properly for you, right? Also, there's types of insurance that you can have, and this is typically with a term life policy where you can have a return of premium. So you can have insurance for 30 years and get back every single dime of it, or some of the premiums returned to you. Typically, return of premium policies are a little bit more expensive, but that's because you have the guarantee to get back all your money if nothing happened to you during the time, right? The premiums are returned to you, but it's typically higher premiums. And some people say, well, I'll take that risk because I'm going to get it back my money. Of course, your money is going to lose some value because of inflation and things like that. But you will know that, if I put $30,000 into this and nothing happened to me, I'll get my $30,000 back. Now, 30,000 might now be worth 20, but at least you'll be getting something back, and you pay a little bit more for that, right? My big question to you, like I said, asked earlier, what do you have right now? What is it that you have right now? Is it adequate for you? Has things changed? Did you get married? Did you get children? Have you gotten older? Are you now responsible for your parents, right? Sometimes when we talk about life insurance, we need to be talking about 3 generations, like covering not only ourselves, but covering our parents, making sure our parents have adequate, because it's going to fall back on us, and making sure that our children are have adequate insurance as well, and even grandchildren, because we should actually start making sure that, like the other communities do with their children, put in life insurance on them when they're 2 weeks old. They begin at 2 weeks old. And we're not talking life insurance in the event that they die. We're talking about how we can turn this child into a millionaire when they're older. We're talking about how we can teach them these strategies so that they can turn around and teach the next generation, right? So we need to look at it at 3 different generations, right? Our generation, our children generation, and our parents, and probably even the 4th one, our grandchildren, all right? Making sure that they have that as well. It was really on my heart to talk about life insurance. You know, in the life insurance world, people are always trying to trick you to do this and to do that. And, oh, we're not going to talk about life insurance. And I'm not about that life. I am, to be honest and be straightforward with you, life insurance can help you not only in death, or help your family, can not only help your family in the event of death, but life insurance comes with what is called living benefit riders. Not all life insurance. You want to make sure you're speaking with a professional. You want to make sure you ask those questions. What kind of living benefits comes? Do I have to pay for it? What does it cover? Right? But a lot of young people are ending up with strokes or aneurysms. They're barely 50. And then they have to be out of work for 2 years. Now, do you have the type of life insurance that will allow you to continue to live on that, to take out that money to continue to pay your mortgage, to pay your car bill, your car loans, your credit cards, your children's tuition? Do you have the type of life insurance that will allow you to concentrate on getting well? Right? Do you have the type of life insurance that you are actually able to access the funds to do whatever it is that you need to do with it? Or do you have to die in order to get that insurance? My husband always says, you say die a little bit harder than every other word. You're like, do you have to die? But it's the truth. Do you have to die in order to use your life insurance, right? Do you have the new kind of life insurance, or do you have the old kind of life insurance? What's the old kind of life insurance? It's the one where you have to die in order to use it. Wouldn't you rather to be able to have access to your life insurance while you're alive so that it can help you? So I wanted to talk about that. I think a couple of months ago, sometime last year, I might have spoken about a young man that was injured on the football field and was in a wheelchair. Could he have benefited from a life insurance, right, that would allow his parents to help out with medical bills and things like that if he had been covered? Maybe. But these are things that do exist. And the problem is, most of the times when we find out about it, we're like, oh, I wish I knew that. I wish I knew that when. Well, I'm telling you about it now. And let's see how we can get our children covered. Let's make sure all of our little ones are covered. Let's get rid of the notion that children don't need life insurance because they are not responsible for any others. They don't have an income to protect. Well, it's not about that anymore. It's not only about that, right? Children need life insurance because it's a place where they can grow cash. It's where today they can put in some money and tomorrow they are a millionaire. Tomorrow is millionaires. Let's go. Let's do that. Other people are doing that. Let us do that in our community as well, right? So I wanted to talk about that. I wanted to make sure that you knew that that existed. And the great thing about children, protecting children, it is very inexpensive because they're young. They're expected to live for a very long time. And if the inevitable happened, you would know that you were protected, right? Life insurance is peace of mind. That's what life insurance is. Peace of mind, right? Life insurance, peace of mind, right? Something I saw today. Let me see if I find it. I saw something today, right? Life insurance is peace of mind. Car insurance protects your car. House insurance protects your house. Life insurance protects your story. Life insurance protects your story. It protects your story. What will your story be? Right? Will your story be, I got ill, but I didn't have to worry about the mortgage. I didn't have to worry about hiring someone to come in and be able to take my kids to school because I couldn't take them to school, or come in and help me take care of my kids. What will your story be? Will your story be that it happened and I had no way to take care of my kids, and now I'm looking at my kids wishing that I had listened, right? What will your story be? Life insurance protects your story, right? So just think about it. Tomorrow morning, you get up, you hit the snooze button, you make the bed, you check your mail. Yo, call Carmen, hit Carmen10k.com, hit the Facebook page, DM me on Instagram, because you know what? You need to get life insurance. You need to see what type of life insurance you qualify for, what type of life insurance your children qualify for, what type of life insurance your parents qualify for, what it is that you need to do, right? I talked about the fact that if you get life insurance through your work, it's not really yours. You're just borrowing it from them for a time. And if they let you go, it is gone, right? Yes, we get life insurance on our car, our phone. We get life insurance on the house. Aren't we just as important? Shouldn't we protect us? That new phone will last a few years. Your life insurance policy will last generations. Generations, right? Given life insurance, getting life insurance is about teaching our children an important lesson in financial responsibility. Yes, it is our responsibility. And it's definitely not, we should definitely not leave our kids in, instead of giving them a leg up, we kick them down by making them have to worry about how to bury you and how to continue to live with whatever, right? The concept that I typically hear is, I'm not trying to give anyone a free ride with life insurance. And you're talking about your children, right? My parents taught me to work hard, and that's what I'm doing for my kids. Listen, life insurance is the number one way that wealth has been passed down in America. Black people have not caught on to this. We need to catch on to this. All right. And like I said, life insurance is peace of mind. And with that, I'm going to thank you for joining me. Thank you for listening. Please like and share this video. Someone else needs to hear about it. Even if you've got all your together, someone else needs to hear about it. Thanks again, and have a wonderful evening. Bye. And bye, Jerns. That's my granddaughter. Yeah, listening to me.